maybe some main takeaways from the conference.
Thank you, Valdemar. It's a great honor and pleasure to be back to the Baltics, especially Riga. First of all, it's been amazing to see almost 300 guests here, all interested in the capital markets, debt and equity, but also in terms of the long-term journey, in terms that the local and the regional market has to go through. I think a few key takeaways would be in the sense of being aware and raising the awareness in terms of the challenges that the market goes through, mostly due to the geopolitics, pandemic, but now also the increasing interest rates, a different kind of paradigm in that respect, which of course is part of the journey. And as I was also mentioning earlier today in the panel, you do have definitely lots of, let's say, aspects and new products to be proud of. You had a first commercial paper in the pandemic, you had various green bonds from different sectors. You had the first sustainability bond by EPSOG issued, and also here in Latvia has senior preferred note issued by Stadele Bank in that respect. So lots of innovation coming, and once again reinforcing the leadership that the Pan-Baltic region has, both on the fintech but also on the green capital market side.
What could be the next steps or next level of help from the institutions, from EBRD, from regulators, or maybe from market participants?
I believe the market already does a lot, together with the support of IFIs like the EBRD, of course also relying and partnering with local authorities in their respect. And I think what can be done more is in terms of putting into action some of the long-term products we've been building together in terms of SME IPO fund, CMDF. You do have local authorities in both Latvia and Lithuania tentatively putting 20 million each into that, and now it's up to Altum and Vega to put it into practice and launch the fund. Of course, another key instrument worth promoting with the local authorities, but also with us and other market participants, is in terms of real estate investment trust. At the regional level, that would help a lot as a new product that can be listed on NASDAQ, but then also go very well with long-term investors, not only the EBRD or other IFIs, but also with Pillar 2 pension funds. So in a way, addressing multiple challenges at the same time.
Baltic capital markets, do you view it as something else, some market of its own, or a part of emerging Europe or the Northern Europe or Europe?
So the Pan-Baltic market, it's a special area for us. It's one of, let's say, the most developed capital markets, especially when you look in terms of state of the stock exchange, post-trade, legal and regulatory part, which helps a lot. We always pitch as maybe as emerging Nordics, emerging Europe, North side, but it always pitched as one single market. And I think that goes very well with also the European Commission priority in terms of launching and promoting the Capital Markets Union. And as I've said during the panel, if the CMU cannot get delivered here in the region, then it will be very hard to be implemented across the EU. Because here in the region, you already have 80-90% cross-border, same currency, almost same legal treatment, which all of these actually support having one single market, but of course also in terms of having NASDAQ on the exchange, but also post-trade part, which helps.
We all remember the 2007, 8 and 9 in the Baltics, where we saw exodus of investors. Do you fear that we could have something similar this time?
It can be in the sense of rebalancing, which is natural part of the capital markets, like ups and downs in the part. But what matters the most is the long-term journey. So that stakeholders locally, when you look at the arrangers, investors, issuers, policymakers, IFIs, that they stick all together and communicate and be confident about the long-term journey. I believe, especially in the Baltics, it might not be the same intensity as you used to see in during the 2007-2008 financial crisis. Because the market develops so much here that you have most of the ecosystem already present here. So you might not have, let's say, hot money that will leave the first kind of crisis. You have more kind of a local participation, be it from long-term investors like IFIs, like EBRD, but also from the Pillar 2 pension funds, and also as well from retail investors. And as you could see, I think there's the case of NFA Green having almost 60,000 different retail participation, which tells a lot in terms of the appetite, but also in terms of the skin in the game of the local market participants. which are here to stay for the long term.